Hey, welcome back, lads and lasses. I just wanted to go over a quick analysis of the first week of April's non-farm payroll move, where we dropped about 500 handles. Now, I just want to do a kind of a ICT concepts review and kind of backtest why this was and why this occurred. So let's get into it. As always, please read this risk disclaimer and disclosure statement. Uh, it's very important that you do, and everything I say in this video should be taken in light and in the perspective of paper trading, because past performance is not indicative of future performance, I suppose. So we're going to start off with significant news events as a precursor. So on Friday, the March 29th, and of Monday, April 1st, uh, Europe and Great Britain and Canada all had bank holidays. It's a German bank holiday, Canadian bank holiday, French, Italian, and this is pretty significant because on Monday, the April 1st, the United States did not have a bank holiday and trading actually occurred on Monday. So, in my perspective, I think that smart money being out of the game from Germany, France, Italy, and Great Britain, or I guess England, I'm not sure what to call it, they needed to play catch up from Monday's overnight slash Tuesday's overnight trading, because you'll see on Tuesday that we had a significant drop overnight before the open, and perhaps this is my thoughts is that, we need to reprice up to that same level or a specific level in order for the other banks to get on the same side and also trade lower. On Thursday, April 4th, the day that we're talking about today, we had unemployment claims at 8:30 a.m. And on Friday, April 5th, we had the non-farm employment change as well as an unemployment rate. So, very significant news to occur in the first week of April here. Something to be mindful of as we go through this analysis. So, I want to review the PD arrays and the institutional fingerprints that I saw occur during this time of price action. This is the daily chart here, and I have highlighted a daily volume imbalance here, and that was left after the all-time high was made. I think the 26th or so. That would sound right. So here I've labeled the price levels on the volume imbalance. We have the top of 74 and the bottom of 66.75. And I think this is a bearish volume imbalance. So on Monday, I have labeled here, we have some of Monday's trading. We trade down for the Monday. I believe this is Tuesday overnight, or this is Monday, technically in the PM, but Tuesday's trading. Tuesday overnight, we dropped really far. Monday left relatively equal highs, so I figured that might be a decent draw on liquidity for price to get up to. So that's just one, and here's that daily volume imbalance again, laid out. And as you see, we can see price broke this little swing low right here, started trading up, broke this fair value gap, traded down to it. I think there's an order block or something over here, and we went higher, repriced higher. Thursday, I have the times in a separate chart, but I believe Thursday at 8 a.m. we drove up into this volume imbalance here, and then from there it was a sell-off day to about a bullish order block on the 1 hour time frame. Okay, let's see. Yes, Tuesday we found support via discount arrays. Here I have labeled a 4-hour buy side imbalance, sell side inefficiency that it looks like it filled and then used to bounce itself back up Tuesday morning, I believe. So this is my thought process: is that institutions missed out on overnight move, this due to the bank holiday, or they made the move to go lower due to the holidays. And since they made the move to go lower, the algorithm is going to want to reprice to a certain level to make sure that all the orders are filled that couldn't be filled, right? Offering buy side instead of sell side, so that could ultimately go lower. And then I've also outlined a 1 hour buy side imbalance, sell side inefficiency, of which the consequent encroachment is about 225 cents. So it looks like price really did just fill the buy side imbalance, sell side inefficiency there on the 4 hour and reacted off of the consequent encroachment of the 1 hour. And about later in the day, maybe Wednesday, it touched it one more time, institutional order drill, right? It just barely touched it and went away fast on the 1 hour. So Monday morning, or Monday, bank holidays, we're selling off because a lot of people have been making money in the bull run recently. So let's try and fix that price, get it equal to the sell side. A lot of institutions were not around, so reprice, use this discount array, reprice, go higher, offer the buy side. I think it barely went inside this daily volume imbalance, like a tick or so, before it started to drop off. So let's do the next slide. So yes, I believe that Mondays between the London and the New York AM session, we have this fair value gap right here, bearish. I believe that's what ICT refers to as a reaper. It is in an extreme premium of this dealing range right here. It has been disrespected twice, right? We have it, we feel it going up once, and we feel it going down, but nothing has really reacted with it yet until, Thursday's New York AM and New York lunch session, when it fills it, respects it, goes down, then trades back up into the lunch hour, touching the daily volume imbalance again, and the body's stopping at the halfway point here. So I think that's a reaper because no one would ever expect it to go and cut through the candles and hit that again, but as ICT students we would. Now granted, this is a back end and this is in hindsight analysis because I didn't see this before and I'm still a novice trader, so back end testing is what I'm supposed to do with giant moves like this. So I can really see the play between premium and discount here being really utilized. So, bank holidays here, send it lower. Tuesday, every banks are open. What? We missed the down move. Let's buy here at this discount, these nested discount blocks. Go higher, right? So look at there's Wednesday, touches it again. Go higher, reprice to this order block here, right? Give us a chance to go higher. And then we get to the volume balance, and then we get to this reaper, or what I believe to be is a reaper. And we utilize that and really rip price lower. Now that's non-farm payroll, so I suppose price can do that. It's heavily manipulated. But you're going to see the 50% level is about the London low right here and about where this price ended up staying on Friday's trading day. So it repriced up to the 50% of this. I believe this range to this, from this high to that low, about where the top of that is 50%. So we'll see a couple more. Oh yes, another thing to give us this bearish bias when trying to back end test this is that we made a market structure shift lower with the break of this low right here. Energetic and caused displacement. So here's that fib I drew. The top is right here, the bottom's right here of the energetic price move down. See 50% is pretty much exactly where price left off of and just barely touched before again finding more support on the way down. I just thought it was really interesting to see this. So I don't know if this, well, I'll stick with the first one first. So we broke this market structure shift lower. 2022 model is in your mind thinking, okay, we broke this high, took buy side something right here, and then we broke lower down this. Great. Where is the fair value gap slash order block that it left? Well, last up close candle before the down move maybe be inside this volume imbalance here, right? This candle right here didn't exactly reprice to it. It touched the volume imbalance and it touched this uh, negative fair value gap reaper here. So that would be the fair value gap you utilize when you break that swing low and you reprice to a fair value gap within the upper 50% of the range, which here's that 50%. Here's the optimal trade entry, green lines right here. So this is a really, really deep premium here. Very favorable to the downside here. And again, we energetically broke this swing low here. I think perhaps we might utilize one of these fair value gaps in here for the next move down. Perhaps this might be a breakaway gap up here, or maybe we just won't fill the rest of this. We'll leave this unfilled. So yeah, again, I just wanted to show the concepts he teaches in Hindsight. And I'm just realizing now that maybe I could have used this same leg down to project price lower and see where it could possibly go, but I did not think about that. So here's that move on Thursday. There's a fair value gap, touches it, reprices all the way down, right? So here's that intermediate swing low. So here's a short-term low, a short-term low, a short-term low. This makes this an intermediate term low, intermediate term low with this. So this makes this a long-term low now. Intermediate, intermediate, long-term, broke the long-term, but not energetically. So it goes up. So external range to maybe internal order block right there on this green candle. Gonna go down to external, boom. Right here, we energetically break this long-term or intermediate term low. I think that signals to me bearishness, extreme bearishness going into the rest of April. I could be wrong though, because after this energetic move down and a break of this, we swing right back up into the 50% range of this energetic price leg here, here. 50% is about here. And I don't know, but I see that it found support on a 1 hour order block candle, which is over here. And during that move down, it did not take the sell side liquidity, resting at this low here, this swing low. So it stopped just above it, or maybe even at the same level. It found support on the order block. But actually, Friday at 8 a.m., it did break this swing low and trace down a little bit deeper into the order block to go higher, at least to the 50% range. Where do you see price going? I want to ask you guys. I see this as a potential breaker, right? High, low, higher high, lower low. So retrace back into one of these fair value gaps, one of these four. It's already at, I believe, the 30% of the range of the energetic swing low from Thursday. So we're in premium, pretty good premium. If you flip it, we're at optimal trade entry at the 70.05 pretty much. So I could go lower, but yeah. As a quick review, bank holidays, Friday to Monday, daily volume imbalance, bearish. Relatively equal highs on Monday as a draw, and a higher time frame PD array resting just above it. We have a 4-hour buy side imbalance, sell side inefficiency acting as support at Tuesday to try and get us back up into that range, or up into the premium. Another buy side imbalance, sell side inefficiency acting as support to get us up into the premium arrays. Another premium array, Reaper, minus fair value gap on the hourly here. Market structure shifts lower, right? So, and breaking an intermediate term low. So just a lot of fingerprints to tell us that this is likely to draw up to a premium. Say we're trading Tuesday, finding support on the discount arrays. Okay, where could it draw towards? This Reaper, this daily volume imbalance, this fair value gap because we broke something lower and we need the trade to a premium to go lower again. So I hope you can take something away from this. Mine was that I really need to check the higher time frame arrays before I take a trade. The news is very significant, and the day of the week is also very significant here. Let me know if you even caught this move. And ICT, if you're watching, let me know if you caught this move or how well I did. Probably won't, but thanks anyways for teaching us all how to do this. So, where do we go from here? Take the order block. It looks like we're in consolidation here. I believe this is the all-time high up here, so a lot of relatively equal highs up here. Perhaps we fill this and take the all-time high again before going lower. Who knows? Well, until we meet again, everybody, thanks for watching, and I hope you have a good day. Take care.